Okay, Trump announced tariffs on Wednesday, and the markets were having a terrible time. The stock market was down. I think it was the worst sell-off since COVID 2020, and that's mostly because people didn't expect all of these other tariffs. People expected China to get hit, the EU to get hit, but Vietnam, Taiwan, India, they really weren't expecting such broad tariffs to all of these countries. And so for a company like Apple that does a lot of business, well, not a lot of business, but they do a lot of manufacturing outside of the US, all of their manufacturing outside of the US, they were expecting the China hit, but they really weren't expecting the Vietnam hit. And so the market responded, down 13% in the past 5 days. And it's mostly because Apple's a hardware company, right? Even though Apple has tried very hard to pivot into services, you can see they're up 15% year over year. They're trying to focus more on the iPad, more on the Mac, but their cash cow is the iPhone. The 69 billion from the iPhone, it's not up, it's not down, it's a very stable source of income. But you get a lot of parts from Vietnam, or you get your semiconductors from China. Here's the bill of materials for an iPhone. This is for the iPhone 16 Pro, the one that costs $1,100. And your pre-tariff total, so just the bill of materials, we're not including marketing, or we're not talking about anything else, just the hardware, it's going to be 550. And so they calculated, the Wall Street Journal, that with the new tariffs, it would cost an additional $300 for the iPhone. Now, I don't know about you, but I don't think I would. I have the ability to pay another $300 on top of 1,100. So I think this goes for most people, and the reason this is because the iPhone is made in so many different parts of the world. You get your processors from Taiwan, from TSMC, you get your displays from South Korea, from Samsung, and you can't just say, okay, we don't want you to make those parts in other countries anymore. We want you to bring them to the US. That's a nice goal to have, but it's not like switching on a light. It's not going to be like that. TSMC has been trying. TSMC has been trying to build a fab in Arizona. The 3 nanometer is their highest end, their most cutting edge chip, but they delayed it by a year. This was in 2024. They delayed it because there wasn't a demand. You could say that the tariffs, are going to force them to come here, but we'll see. We'll see what happens. And Apple and TSMC, they're like this, yeah. So we're gonna see how that pans out. But besides Apple, speaking of people paying $1,400 for an iPhone, how are people feeling about the economy? How are people feeling? Let's see. The economy's great. Why are Americans in such a rotten mood? This is from November 23. The economy's good. Why don't people know it? This is from June 24, right? People have been feeling this way for a couple of years now. And the biggest issue for voters in 2024, it was the economy. It wasn't, I think the reason Trump won in 2024 was mostly because of the economy. People looked, there's this famous quote from Reagan. I'll play it.
Are you better off than you were 4 years ago? Is it easier for you to go and buy things in the stores than it was 4 years ago?
And I think most people would answer this with a no. They would say, no, not really. Egg prices gone up, can't really afford anything, can't afford to buy a house. And it shows in the data. So we can compare Trump's presidency. So 2016, inflation was very low. This is an inflation chart. Very low. The US targets around 2% inflation every year. So, around the 2 number is great. And, right up until the end, it was fine. It had the spikes, but it was manageable. And then COVID happens, and we print a lot of money. A lot of money, your Biden bucks, your stimulus checks, a lot of PPP loans, and people had a lot more money, so they were going out and spending a lot more. And it was fine when they had money. You know, if when Biden gave them money, they went out and spent it, and that was fine. But when that money ran out, that's when the problems began, because once inflation is high, you're going to have a hard time bringing those prices back down. Those prices are probably not going to come back down once it's already up there. So people now had to get used to this new price, and they aren't, clearly they're not happy with them. And so it was a refusal of Biden and his term. I think in the beginning, people were like, Biden's great. In 2020, when I was getting my stimulus checks, Biden was the best. But in 2023, 2024, not so much. People were really feeling the strain in their wallets. And so they looked at how it was during the Trump years, and they said, well, I was feeling great under Trump, so I think we go back to Trump. But that's not really bearing out in the data. Once again, the inflation is high-ish. They're calling it sticky, but it's not going down. And it's also this part. If we were only dealing with 3% inflation, even 4% inflation, I think it would have been fine. But prices went up so much, 9%. Once you're already there, once you already paid $109 for something that costs $100, a 3% on top of that, it feels like it's too much, right? So that's the issue. Now, what are people doing? What are people doing in regards to dealing with this? Well, they're delinquent on their car payments. Car payments are behind at a record level, 6.6%. That's pretty high, and it's going up. It was going down during COVID. It was probably 21. It was pretty low. People had a lot of money, so they spent it on cars. There was a lot of revenge spending going on, but now it's back up because it's not sustainable. Similar thing with credit cards. The share of active accounts making minimum payments, just the minimum, is up. And it's rising. It's going up. People are really feeling it. And so what does that necessarily mean? How are people gonna still gotta live, still gotta eat? What are you gonna do? Well, you're gonna use Affirm, or you're gonna use Afterpay, or you're gonna use Klarna, and you're gonna use these buy now, pay later services because you want to spend the money, but you don't really have a way to. You're gonna put your Starbucks order on buy now, pay later for your $6.50 your morning coffee. And companies are seeing this. Companies are seeing this as a trend. They might be seeing their sales are lowered. So DoorDash is partnering with Klarna for more convenience. They say it's very convenient for DoorDash, I'm sure, but it's looking like, I guess you could call this shadow debt, right? It's debt, but it's not being reported. Well, it wasn't being reported until 2 days ago, 3 days ago. Now, a firm is gonna start reporting your credit, your loans to Experian. So you might take a credit hit because of your BNPL purchases. And we're gonna see how the economy is really doing. We're gonna see how people are handling, because I'm not saying like most of the delinquencies or most of the debt is in BNPL, but I think we're gonna get a fuller picture of how the economy is really doing, and it might, people might come to the logical conclusion that we are in a recession. Just a final point. These are the 6 biggest bull runs. A bull run is when you go from the prices of stocks, the average goes from low to high, and there were a lot of bull runs in the past. Some that had very significant rises, 200%, and the current one that we're in is the largest one in history. 400. Actually, that might not be true, but it's a very large one, 405%. And March 09, after the crash, up until now, And all of these corrections, all of these bull runs had a correction at the end of it. There was a crash. There's always a crash. Everything that goes up must come down. So we're kind of waiting to see what happens, and it seems like if you look at the evidence, it's a recessionary environment. It looks like there is going to be a recession, and it looks like the tariffs. I'm not saying the tariffs are going to cause them, but it definitely feels like the tariffs are not helping. Um, but yeah, that's really, I wanted to get my thoughts out there on. That's all my that's all the thoughts I really have on this. Yeah, thanks for listening.